back. Hey, welcome back. Welcome back. Welcome back. Yes, sir. Yes, sir. Hey, welcome back, retail family. Hey, listen. We've got a lot of craziness going on with multiple our plays, especially our AMC play. Again, we're going to tap in, go over a little group huddle here at the end of this clip. I got a little information for us to go over. And then, like I said, perspectives of sentiment, how I feel about what's going on, my strategy, how I'm moving. Obviously, like I said, I'm not a financial advisor. You should never take anybody's advice solely, except somebody who is a certified advisor that has spoken with you. Otherwise, hey, listen, you driving your own boat. Hey, everybody's buying their own boat to financial freedom, baby, and I'm right next to you. Hear me? But nonetheless, I want to tap in. We're having talks about the futures. Things tying in. Have y'all noticed all these cuts that are occurring with companies like Amazon? I thought, like I said with the video yesterday, the perplex could be maybe AI coming, but there are cuts happening with staples, things like that. So we're in the dire straits, guys. Still, the terrain has not changed. We got a lot of momentum plays to hit and cash up in. Like I said, I'm gonna show a little something on GTI as a reminder of what's coming up. Just see if anybody wants to tap into that. But let's get through this clip, and like I said, we're gonna have a little huddle up here about our AMC play and everything that follows. All right, let's get down to it. Yes, sir.
Tiny gain for the Dow and the S&P, and a very modest gain for the Nasdaq. Lloyd has the duty to watch the markets for us today whilst all hell's breaking loose outside this window.
Please do.
All right. I think it seems to me that this market
Are they
just
down
wants
in?
to
Are
go
they in New
up.
York?
You feel that?
No, I think we're probably towards the top of the range right now. We'll probably head towards the bottom of the range, around maybe 3,700 or so on the S&P over the next couple of quarters. I mean, look, Google this morning announced they were cutting employee laptops and staplers. If a company like Google has to announce they're cutting expenses in staples and staplers, that doesn't give me a large vote of confidence that things are looking all right. And yesterday, with OPEC cutting production estimates, and another negative negative vote of confidence towards the future outside of potential political reasons.
Amazon cutting. They haven't even announced how many people they're actually cutting, but they're going through corporate offices and employer offices getting ready to do cut and layoffs. I think McDonald's as well. Hey, listen, guys. The time is now. The time is now. XRP, gold ETFs, gold stocks with dividends, FNV. Like I said, we're gonna have all this stuff coming in the future. I'm also gonna release a video about how I've built my portfolio to kind of be able to test these times while still being able to have the risk leverage, to being able to go into momentum plays, but still having the mass majority of your money protected. Because I came into the stock 2.5 years ago, buck wild, had all my money in high risk plays, and I learned a lesson from that. But like I said, I know that's a blood that everybody's got to put in the game. A lot of people are just joining in now, getting into these sagas and understanding that. But being able to build a certain strength of portfolio that's bound in ETS, VTI, growth, heavy growth stocks. You get your squeeze action from Tesla, Apple, that's paying a dividend, really, things like that. And you take about 20% of your portfolio, and that's where you can play a little, bet the house. You know what I mean? But hold on, let's finish these. But just the current state of affairs, guys. I don't care what anybody tries to tell you. Money's dry, liquidity's dry. Which is why all these other plays that we're looking at, that we've all had on radars, we're about to have to spin the block on, BBYs, all them things. The time is coming up now. Let's finish this video. We got to huddle up at the end.
Estimates are still pretty high for this rest of this year, and then for next year, 10% earnings growth in 2024. Expectations are pretty high, so that means higher hurdles, right? So I'm not very confident that the market's going to continue to rip higher.
Then you've missed a nice Nasdaq rally. Because the Nasdaq's gone up, 20% in the month of in the first quarter? You missed it.
Well, listen, that's why you have to stay invested and be defensive. Right now, the game is cash flow, right? You have to be able to owning a good cash flowing companies with good balance sheets. I mean, the big
high cash flow companies, Tesla, Apple's company with just money just sitting up is how you get how we wave it through
really
this.
Talks about is not whether the
But
market
Tesla is
higher, the
a
market
hell of an
rips
investment
lower.
in general.
It's if the market
I'm just telling you.
stays sideways.
You
for
getting
the next couple of
SpaceX,
years, because we still have a lot of
Elon
headwinds out
Musk.
there.
I don't know
If
how
the
much
market
that's
stays
worth.
sideways. What are you going to do? I mean, you have to own good cash flowing companies that pay good dividends. You have to own treasuries out there. Covered calls, I know I talked about covered calls with you before. You didn't like necessarily me mentioning covered calls, but you have to make sure that you're owning those types of companies. You have to stay away from higher growth names.
Do them
I
calls
think you're going to see a lot of dominoes start to fall, and those higher growth, non-cash flowing names like the high-tech growth names. You saw Silicon Valley Bank, the banking system, some of those higher growth banks lending to higher growth companies collapse. I think you're going to start to see something similar happening to high growth names, and that's a lot of headline risk that nobody talks about.
Well, now you got me worried. But Luke, thanks for being with us on an important day. We do appreciate it, and we take notice of what you got to say. Thanks very much, Luke.
All right, people. All right, people. Let's snap down through this, obviously, and look at the headlines. How is this even in here? Hey, they ready. Whoa, whoa, whoa. Hey, but nonetheless, guys, just tapping in. I've got a couple things to show up here. Obviously, with our Stonko tracker with AMC, we're going to go down the list. AMC, we're still showing 0 shares that borrowed at 381% cost to borrow, I believe it is. Let me see here. Excuse me, 351% cost to borrow. And obviously, we're seeing this here. Guys, obviously, everybody, you're in la-la land right now because everybody's trying to figure out what the temperament is, how they're playing it. Like I mentioned yesterday, I pulled up, I moved my position over to 8 because, like I said, I've learned I'm not standing, holding, I'm bouncing and building cash. That's what we're doing over this channel. Our channel is about retail getting rich, period. We getting money over here. That's all we're going to focus on. That's why I got to say I bring it real and I bring it true. Had a couple people that were sad yesterday's video, but I'm not about to just leave y'all hanging. I'm sorry. I'm not one of the people that's going to run you into a wall when something happens. Wait, we need to step back, analyze. Having your money sitting on the side is not a bad strategy. Being cash heavy like these companies is not a bad strategy. And especially if you have a bulletproof portfolio running in the background paying you dividends, it makes it better. But these plays are meant for us to hit. Boom, 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 boom. Hit. How do you say hit? SECO hit. 180%. There's retail out here obliterating things. Coming in, I want to tap in on the official Gtii web page just because, like I said, guys, this is a play that I'm like I said, I got my eyes on the ground. We got up to the 15th to really make any decisions, or really the 14th. 15th is the dividend, ex-dividend date, so basically record date. So that if you don't have the shares by then, you're not going to be able to get the dividend. Like I said, that doesn't necessarily mean you need to buy them. And I'm not telling you to buy them. I'm just telling you some strategy things that I'm hearing from retail and how, like I said, we're moving to get ready. Because like I said, we're building this cash up. Retail's leaving out of 2023 with more cash you went in. It's already spinning. This is a whole nother retail game. We've learned lessons. We move. We're getting methodical. We're getting real sinister with it. But nonetheless, I'm up under here. I want to just tap up under here so y'all can see the record date is April 15th. And the share split was just down here. That's all I want to read. Announced March 17th. It has submitted corporate action request. FINRA, it'll be a 1-for-10 stock dividend to its shareholders. And like I said, guys, this ain't going to be like a price cut. This is going to be like what a dividend should have been with AMC, not what APE is. So this is going to be something that's going to be paying you revenue into your account. Also, what this does, this focuses in and gives account for shorts. I wanted to pull up this other page just so everybody can understand, hey, retail, we beat them to a pulp over and over and over again, and they had to cheat all the way to the point that we beat them through their cheating, and then again our CEO allowed this misconduct to occur. But nonetheless, I want you to see again what it looks like with other companies that are actually combating the nonsensical. Another good possible reason for you might want to look into these investments, just get these on your watch list, is you'll see the CEO there filing lawsuits against Alpine Securities Corporation. If you're not aware or in touch, I don't know who all was involved in these plays, but basically this is a smaller set of hedge funds. These more family-sized, family-owned businesses that are run and shorting companies. Like I said, because not shorting something is not necessarily legal. It's the naked shorting that makes something excessive or bad. But they're getting corporate access, gets them from the company. And again, obviously, this is from the company, so you don't have to worry about the company settling out. But these are a few companies that are attacking shorts while retail attacks at the same time. Like I said, I've realized, especially with how I'm moving, where I bounce around. I'm an 8 right now because I see the the arbitrage happening with ape rising, because like I said, that's what they're gonna have to be buying into, because they're taking ape to convert. That's been the kill switch for AMC the whole time. So like I said, I'm saying an ape cashing up, maximizing, and when I realize, oh, what, I'm sliding out of there, guys. Up until the confirmation of this conversion, yes, that is going through, but the judge still has the right to say yes. So things are still aligned. I still feel like possibly, and y'all tell me how y'all feel in the comments about this, that price swing yesterday where AMC with negative 20%, ape went plus 23%, immediately felt like there was some type of conversion or something happened. Something happened with the algos, something switched, some shares were allowed or something that made that happen, because that wasn't retail that was sold, and it was so instant, it was timed. But I just want to time. That's my opinion on kind of what's going on with that and how I'm moving with ape. Like I said, there's still money to be made out of AMC and ape, but like I said, we're coming into, this is a crazy little world or window you're in. Don't get your foot trapped up in this. Pull money to the side, deleverage down. We got many retail plays that we're about to get ready to swing to and hit. Period. So get yourself ready. I promise probably these next 3-4 months is going to be the best probably profitable month, especially if you're swinging over here with the Money Montgomery channel. Because like I said, we're going to be laying it out. We're going to be bringing in, like I said, we're going to start reporting more and more and more. We're going to finish out where we're at with AMC. Like I said, we're bringing, whatever news comes. Like I said, I'm wanting to make sure all of my retail family, retail army gets out of that door, and then we're moving to another play. And here's another pivot, another thought process on it. Guys, when he gets done with all his debauchery, the way it should play out, all this debt should be paid off. What I learned over the last 2.5 years is there's many times where I could have left out and came back in, but I was stuck in the mind frame, I'm holding, I don't want to lose any. And I left out on money and left money on the table. This play is going to run later. Same with GME. AMC and GME are going to be background in a year's time or so plays when they've proven their charts again. And then there'll be a pop-up and another run-up. But there's a lot of money that you be leaving on the table. And like I said, whatever you do, however you do it, if you're going to stay through the whole thing, if you have put enough money to where it's like, hey, I only have enough money in there to where it's like, hey, it doesn't matter to me. Well, then cool. That's where you're supposed to be anyway. So you could hold it. Diamond hand through. If you're like me, we're like, hey, I'm going to maximize this money. I feel no obligation to any stock. I'm obligation to myself and retail. Because we move as a team. Y'all hit something, I hit something, we make prices move. That makes everybody money. So like my obligation to AMC is nothing. Bump Adam Air and bump all that. We've got a lot of money to be made, and we have realized that through that settlement, that proves everything, guys, that there were synthetic shares, everything was proven true. Because again, now that was proven that case was all about them being sued about ape being something that lost those shareholders specifically money. Well, they gave them $7.50 a share. They're basically returning all the money they lost on ape. But that's only a few people, of course, big money, that were in a lawsuit. If y'all have settled that, then doesn't that mean that all of retail is supposed to be getting that money too? But nonetheless, that's not how it works out. But, I want y'all to kind of see the ridiculousness of it. And if it's going to that depths, guys, I'm not going to be going against, we taking it to corporate action. And then there's, hey, how much we got to, all right. Hey, you got it. Let me scrape up whatever cash and I'm moving along. We make more cash. We got too much stuff going on. Content's going to get way better. Hey, retail family, let me hear it in the comments. How you feeling? What's the sentiment? Who's in this wave of trying to make money with me and understanding there's way more plays? I'm up every single day, 4 o'clock in the morning, watch plays run to 200, 300% each day. We got many of plays. We got many of things, a lot of ways to go with it. It's time to start building that money back up and then building a bulletproof portfolio. I'm going to release a video out this month about how I have my portfolio up. Y'all give it a check out. Guys, don't forget, HBAR, Cardano, XRP, Bitcoin, Ethereum, gold. It's time to be putting those money in assets that are going to be making money and running up. And like I said, keep about 10, 20% of your portfolio. We got some plays that's going to make us some money. Real deal money. But like I said, hey, retail, hold it down. We're in this thing together. Hey, I'm in this thing. I've switched over to 8, but I'm still sitting here along with you. I'm ready to jump back and jump forth as I always recommend that strategy, y'all. And that's basically what I'll be preaching, every single day is that strategy. But y'all boys, hold it down. Hey, we got some money to be made. There's a lot of stuff. We're in a wild range. We're about to see what these next days bring ahead for us. Hey, y'all hold your head up and let's get down to it, baby. Let's make that money. Yes, sir.